if we do go into a recession, being able to save on labor costs and increase efficiency in store is a benefit. So I think that this contract is going to go forward regardless of what's happening in the broader world. So I still think the stock is very, very interesting, hard to be disrupted. I think that the US expansion is just going to continue. And I think the 10-year horizon for this stock is crazy. And it's kind of like nobody's really talking about it. We don't hear much coverage about it at all.
I would even, so when you and I swapped Slacks last night, I was thinking she's going to go with Vusion. Would I be right in saying that if you could only hold a 3-stock portfolio, this would be one of them?
Yeah, I think so. Because it's just like, it's just such a smart crossroads of things. It's tech, but it's not too techy. It's retail, but it's not e-commerce.
Anne Marie, how are you doing this week?
I am good. We are both sick, which is not ideal for podcasts where microphones are really close to our mouths and nose. But luckily, we are not in the same room.
Yeah, so we don't make each other sicker.
Yeah, or just so there's just not so there's not like an echoing effect of like when one coughs, there is also a distant cough in the background also being picked up. So
or some kind of infinite loop where I catch your thing and then you catch mine and then
we go round and round. Yeah.
Well, I have to admit, I don't feel too bad at all. You know, it's just kind of that springtime pollen thing. You just gave me the most amazing lesson on how male and female trees have crept their way into various different pockets of suburbia, which has resulted in a change in the pollen profile, which has resulted in... Honestly, is there anything you don't know, Anne Marie? You're just like this walking thesaurus and Wikipedia.
Yeah, I mean, I guess I have a lot of information about not so useful information, and I have very little about like actual important, impactful things. So I think that's kind of where I draw the line, to be honest.
If I ever heard someone being modest, that's it. Anyway, look, let's get on with the show. I guess this is quite an unusual point to be broadcasting because things are changing so rapidly. It's hard to actually say something and to stay relevant for 24 hours. And as you know, Anne-Marie, I've really tried throughout my life to avoid any form of political commentary because I actually particularly dislike tribalism. You know, despite it being one of humanity's building blocks, like humans wouldn't have made it to this point without tribalism. But for example, I do not know how either of my parents, who I lived with, and was fortunate it was a traditional family household, how either of my parents voted in their entire life, not once. So growing up, I didn't even know what party they were affiliated with. And they were very, very strong advocates of voting. That's not to say that the obligation of voting was ignored. In fact, I wouldn't dare miss my chance and obligation to vote. I wouldn't dare even suggest to my parents I'm not voting, and I always have voted. And the same goes for my household today. My 2 young adult sons don't know my political beliefs, and the reason is I think it's a little sickening how in modern times, especially, commentary on politics has become more and more polarized around the world, and that people feel they need to push their beliefs in other people's faces. Now, I love passion. Obviously, I've broadcast here in this podcast forever, and I've pushed my beliefs on the stock market. So I say that with a full awareness of what we do and what I stand for. So I do love passion, but I really detest pushing ideology as a badge of moral superiority. So you might go, what have I tuned into here? Well, what I'm not referring to, funnily, is America, or at least I'm not only referring to the United States. It's all over Europe too. My point is that I will never air my views on President Trump or any president, nor should anyone infer my beliefs from what I'm saying. Not that anyone would actually care, but still, I just think I need to just put it out there because we're about to dive into a conversation that's very, very difficult to have without at least acknowledging the current president's policies. So with that disclaimer, regarding these newly announced tariffs, I cannot find a single credible economic analyst or academic who sees the tariff structure unveiled by the president as anything but utterly disastrous for the US economy. And mine isn't a controversial position. Like, it's the overwhelming consensus. Whether you open the Wall Street Journal, whether you browse opinions from speakers at Davos or follow any respected economist or global trade expert, you'll see the same warnings. This is a serious self-inflicted wound. And even the president's closest economic advisors appear to be unanimously tilting away from what he's doing. Gary Cohen, for example, who's the former director of the National Economic Council, resigned in protest over President Trump's tariff policies, especially relating to steel and aluminum and that kind of stuff. Elon Musk has publicly criticized the approach, which I thought was funny. You know, the most powerful and richest two guys in the world sitting opposite each other. You know, eventually one of them will stay rigid in their beliefs. And he's basically criticized anything that goes against freer trade, and he's warned of the damages that tariffs could inflict. Scott Bessent, who's Trump's Treasury Secretary, who I discussed in a recent podcast. Why was I talking about? I can't remember, but he reportedly tried to temper the messaging around the tariffs. Kevin Hassett, the other guy who I mentioned in a recent podcast, he's the director of the National Economic Council, has pushed for a more balanced, negotiation-driven approach. And even in the words of the Wall Street Journal yesterday, and we're recording on the 9th of April, Wednesday, 9th of April, it said, U.S. executives and senior White House officials seeking clarity from Commerce Secretary Howard Lutnick, the point man for Trump's trade agenda, have come away confused and exacerbated. And I know even here in Ireland, this tiny little country floating in the Atlantic Ocean, we are almost exclusively exposed to one narrative on Trump. And I'm not going to say what it is. Anyone in Ireland knows what it is. It's a non-positive narrative. And even when you look to economists who are as muted on politics as I try to be, there appears to be only one verdict in the courtroom of economic opinion. Like, for example, Ivan Yates, who's a Trump mega supporter, I think is safe to say, on his podcast here in Ireland with Matt Cooper, said that this is madness. And within the cabinet, people like the Commerce Secretary, as I said, Howard Lutnick, have shown this kind of cautionary stance, a more cautionary stance. And even seconds before we started to roll here on this podcast, Anne Marie, you sent me a note from Reuters that said that U.S. Treasury yields are spiking. Hedge funds are unwinding basis trades. There's forced selling and panic. Japan's central bank and regulators are calling an emergency meeting. And as these words leave my mouth, the U.S. dollar is falling. So, I mean, there's total strategists all over are warning of this regime shift and speculating that treasuries are going to lose their status as the world's ultimate safe asset. So I'm not going to ignore the opinion of, well, every opinion I'm absorbing, you know, and I am totally ill-equipped to add a level of thought value to the deluge of major change such as these. Look, the bottom line is we all hope Trump's sixth sense is right. So the whole world, everyone who voted for him, everyone who didn't vote for him, and everyone who's outside of the United States, kind of hopes he's right. But it's like it's very difficult to just pin your hope on a hope when experts in economics are saying this is ludicrous mode. And we all know that President Trump will do what he wants. Like that's been proven, and he is the most powerful man in the world, elected by a democratic process, and his word is the will of the people, or many of the people, and his actions are the will of many of the people. So in the wake of all of that, we see opportunity in the markets, maybe extreme opportunity. So you and I had a quick chat last night and thought it would be fun to pick one European company that we think looks good today against the backdrop that I opened with, and a second, that's listed in America that is either a traditional value stock or oversold, to use the old brokerage expression for a business that's been hit too hard by a sell-off. So with that opener, Anne Marie, I'm going to ask you to tell me about one European stock that, let's say, you tell your parents to buy today.
Okay, that's a pretty good opener. One thing I will just add on is, I suppose the thing that these tariffs have highlighted is, I suppose, the Trump administration is not afraid of volatility, and so even if the tariffs get reversed, I think we've kind of learned a lesson here that things might be bumpy for the next 4 years. And it's a good reminder, I guess, to make sure you're diversified and maybe look at your portfolio a little bit less would be the takeaway. And also, you hear this a lot in relation to selling stocks where people always say, oh, don't make any decisions emotionally. I would also say, as we're about to pitch a bunch of stocks, I wouldn't buy anything emotionally either. I would kind of allow
No.
yourself to settle. Particularly, I wouldn't
Yeah.
initiate any new positions into any businesses, but it is a great time to maybe be updating your watch list, or maybe you're having this moment of realization where you say, oh my gosh, I'm maybe not as geographically diversified as I would like, or maybe not as sector diversified as I would like, because a lot of the sell-off that we're experiencing at the minute is tech concentrated because the market has been so tech concentrated. And so I do think it's a nice time to take a beat and go back and look at an investing journal and remember why you're holding what you're holding, and think about maybe if you need to make any broad portfolio adjustments. And then I would just say, batten down the hatches for a little,
Yeah.
and don't jump.
Yeah.
Don't
No,
do
I
anything
totally
too
agree.
rash. Yeah.
Emotions are the enemy of returns, and having run Horizon for 5.5 years, I wouldn't like to describe myself as emotionless. In fact, that's completely opposite to who I am. Most of my behaviors are driven by emotions and thoughts, at least as Siamese twins. But certainly, when it comes to stock investing, I feel nothing except the desire to win. I'm
Yeah.
absolutely, completely devoid of feeling. If I bought a stock today on the basis that I believe it's an awesome business and it fell 90%,
Yeah.
and by the way, I saw Netflix fall 80% in a 3-day
2022.
period. A
Yeah.
3-day period. Way back when Reed Hastings did his thing and decided to spin off the DVD and the streaming business, and then he created a new brand called Quickster, and he fell from grace. Sorry, the business fell from grace at lightning speed, and I just watched it with what is the right word? With interest. I was fascinated, but I wasn't rolling in bed sick with the idea that my at that stage very modest portfolio had just taken the biggest clobbering I'd seen. Now when I was 26, actually, truthfully, after the dot-com bubble, that was tough because I thought I was done and I could retire in about 3 years because I thought it would keep going. But since that happened to me, I went through a baptismal fire of emotions. I now watch today's news with interest because if you do not absolutely buy into a long-term game, your emotions will better you. Yeah, they just will. In anything, when you get married to somebody, before you walk down that aisle or into the registry office or whatever way you choose to do it, you have contemplated the fact that you're buying into something for the long term, and it will be blips. Any long-term pursuit requires you to understand before you take it on that there's going to be moments of where you're tested, and stock market investing is a wonderful conditioning system for your emotions. And you and I are sitting here, and you only have to turn on Bloomberg, CNBC, or whatever it is that RTE News, the Irish National Broadcasters News, are leading with stock market stumble. So you have to just condition yourself and realize that, look, if it was a great business last week and it's now down 50%, it's probably still a great business. Let's have a look, but it's on fire sales. So that's really, I think, where we're going to try and bring this show.
Yeah. Okay. My international stock that I went with, that I believe I've spoken about before on this, and it's in a couple of our products, is VusionGroup, which trades in Paris on the Euronext. Its ticker symbol is VU. And then I found them initially doing a Charging and Fearless screener, and it popped up, and this was early days. This was like first 6 months of Charging and Fearless that it was pitched initially. And then 6 months after that, it cleared Nexus's 1 screeners and entered Nexus 1.
Yeah.
And I love the company. I think it is just such a beautiful, like Peter Lynch, boring business. Nobody's really interested in disrupting them because why would you bother? And that's because they are specialists in electronic shelf labeling, also known as ESLs. And ESLs are basically very tiny screens that affix to shelves and allow stores to automatically change the prices of goods. The main benefit is going to be the labor cost saving. Swapping out tags, especially in very large retailers, takes forever. Walmart, which is going to be our main growth driver here, stated its weekly price updates take in-store staff more than 2 days to complete, with more than 120,000 labels requiring attention. So that is crazy to think that they're undertaking that every single week. Now, the rollout of these screens have made some journalists balk, so we may as well unpack that, because they are suggesting that the tech could be used for surge pricing or dynamic pricing in a negative way towards consumers, basically allowing the stores to increase prices as demand surges. That being said, this tech has been used in France for more than a decade, and we've never seen that be an issue. But I do understand that people often assume that companies in the United States will take advantage of them unless otherwise regulated. So I do get some of the discomfort around this technology, but I will say, even if regulation comes in to ban surge pricing, it does not eliminate the benefit of ESLs, which is that you do not have to have a mountain of staff staying overnight 2 days a week to try and swap out all the tags. Like, that's just a huge win in terms of efficiency. Interestingly, supermarkets in Germany like VusionGroup's tech because it allows them to move merchandise more rapidly via automatic discounting. So an example of that you could have the tag set up that after 4 p.m., everything in your hot deli goes 40 or 50% off, just so you can be like, oh, we need to get rid of this like potato salad and these chicken goujons or whatever else. And so that's more what people are interested in, the idea of being able to identify, here, this stuff is not shifting off the shelves, discount that by 20%, see if that makes any kind of difference. So again, just efficiency across the board.
And you presume that there's a benefit on the other side as well, Anne Marie, so that they can actually broadcast to their consumer base, hey, guess what? Chicken goujons have just dropped 50%. So there's a crowd mob running in for half price chicken goujons.
Yeah, and you can make that, then you can have an automatic announcement that goes over your loudspeaker. The other big benefit is that a big trend that we saw for in-person retail over the last 10 to 15 years is the idea of we price match. So, hey, bring in the advertisement of our online e-commerce competitor and we'll price match that in person.
Yeah.
And this allows them to effectively price match on like right on the shelf label, because they can go online and say, hey, our competitors knocked $5 off this, just automatically update the price on the shelf. So it is a benefit to consumers in terms of discounting. As I mentioned up at the top, the main reason we're interested in VusionGroup right now is they're coming off the back of a massive trial with Walmart. So they signed a deal early last year to begin trialing in about 1,000 Walmart locations across the United States. And by the end of the summer, Walmart had already announced that the tech will be coming to all 4,600 Walmart locations by the end of 2026, which is a doubling of their previous commitment. So that's great to see. Obviously, they were very impressed by the trial. This, along with some other regional deals, has made North America Vusion's largest geographic market. It has quite an impressive achievement, considering it accounted for just 20% of sales in 2022. So this is a massive geographic expansion, which is what we love to see. Vusion's 2024 financial performance was exceptionally strong. Revenue grew 25% year over year, reaching just over €1 billion. Over the last decade, the company has maintained a 10-year compound annual growth rate of 29%. Which is solid.
That's insane. Yeah. That's
and orders surged by an astonishing 71% year over year this year, while net income increased by 54%, reaching €53 million. And obviously, this rapid growth is being driven primarily by hardware sales. All these new Walmart stores are going to need this technology installed, but the software side looks promising as well, because that's also what they sell. They sell the software to maintain the tags. So even if you put 4,600 tag units into every single Walmart, they will continue to have a recurring contract with Walmart to maintain the software. And so right now, the services segment, which is internally called VAS, so if you pull any of their annual reports, that's what it's called, VAS. The sales this year remained flat year over year, but the recurring VAS segment grew 38%. They said that for 2025, they expect the VAS revenue will grow by more than 80%. So this is just them showing the benefits of them having these long-term contracts with massive retailers. Vusion is not the only ESL maker in the game. Its main competitor is called Pricer, which is Swedish. It's also publicly traded, so that was great. I could go have a look at them. They have lagging sales momentum at the bit. Their revenue actually dropped this year, and they're only about a quarter of the size when it comes to revenue. So it does appear that Vusion is maybe the leader in this market. Vusion stock price popped when the Walmart update came out in February, but it is now down 8% this month due to the sell-offs.
I see they're listed on loads of exchanges here. I'm just looking at Bloomberg. They're on Dusseldorf. They're in London, Frankfurt, Paris. They even have an ADR, as far as I can
Yeah.
see.
I would
Um,
caution people with the ADR because the volume is really low, very, very
yeah,
low.
yeah,
Yeah.
yeah, yeah, yeah. So, which exchange is your favorite?
Paris is the primary. It's a French
Yeah,
company, so
yeah.
they originate out of there.
Oh,
So I
yeah.
would go to Paris. I think it gets duplicated across the
Hmm.
Euronext, so that's where it's popping up on the others. So yeah, if you have the option, I would say just go to the OG. They originate in Paris. Like,
Do you know, and I don't mean to throw you into a technology discussion, but do you know
mm,
how it works? Is it RFID? Like the radio engineer in me, which was where I
mhm.
started my career many moons ago, nearly 30 years ago, um, is curious about how it works. Is it RFID? Is it Wi-Fi? Is it what's going on in there?
I think it is RFID. I was looking at
Hmm.
the a technology write up actually about it. It was actually centered around Walmart's use of technology rather than
Yeah,
Vusion Groups. And
yeah.
they were discussing how when there was initial RFID technology that came in when it came towards when inventory comes into Walmart locations, updating their computer systems, they started using RFID technology in like 2004. They were one of the first in person retailers to do so. And it was considered like a massive benefit for in store efficiency. And so this writer was writing about, oh, now they're using these tags. And this is another step forward. And Walmart is kind of the first huge retailer in the United States to adopt this technology, in addition to Kohl's, which Kohl's is not moving the volume that Walmart is moving. So
Yeah,
it's good to see Vusion kind of get this deal. So yeah. And
yeah.
the main kind of takeaway is obviously we're in very uncertain macroeconomic conditions. I know people are
Hmm.
probably sitting around saying, hey, if this is a French company and the tech is going into the US, they're going to get hit by a tariff. Yes, definitely. It probably will get hit by a tariff, even if the tags are being manufactured in Asia and they're coming into
Hmm.
the US, there's going to be a tariff there as well. But I see the efficiency gain that Walmart is going to get from this tech as being a long term trend that they're going to want, regardless. Even if we do go into a recession,
Hmm.
being able to save on labor costs and increase efficiency in store is a benefit. So I think that this contract is going to go forward regardless of what's happening in the broader world. So I still think the stock is very, very interesting. Hard to be disrupted. I think that the
Yeah,
US expansion is just going to continue. And I think the 10-year horizon for this stock is crazy. And it's kind of
yeah.
like nobody's really talking about it. We don't hear much coverage about it at
No,
all.
I would even so when you and I swapped Slacks last night, and or like the WhatsApp of business, when we swapped the Slack message last night, I was thinking she's going to go with Fusion. Would I be
Yeah.
right in saying that if you could only hold a three stock portfolio, this would be one of them?
Yeah, I think so because it's
Yeah,
just like it's just such a smart crossroads of things. It's tech, but it's not too techy. It's retail, but it's not e-commerce. We know that in-person retail is going to remain like not everything is going to go to Amazon. We know people continue
yeah,
to shop in person. That's the big lesson that like retailers like Nike learned when they tried to pull all their stuff out of in-person retail. People like going in person to see stuff. And I think when it comes to groceries, that's particularly true because like Instacart shoppers are bad at picking out produce.
mm.
Sometimes you gotta go and pick out your own tomatoes. And
D-
so I think this is the type of technological innovation that like in-person retail needs. And it's just like it's easy.
About a year and a half ago, my family and I, as in my cousins and I, had to go to Colorado for a very short visit. And we arrived, and I realized the power of in the flesh retailing
Mm,
because I'd have no interest in that. But I was the designated driver. I'd rented the car, and we all, bailed in to go to the airport, from the airport to the hotel and whatnot. Next morning, my cousins were banging on the door. Come on, we're going to Target. I'm like,
yeah.
what? What is that? So anyway, as in I knew what Target was, like, why are we going? So anyway, we went to Target, and I dropped them off, and there was like a crowd rush out of my car, or the car, into
Yeah.
Target. And I went in, and it was Willy Wonka's chocolate factory for retail. I'd never
Yeah.
walked through a Target, or at least if I did, I didn't recall anything about it. I actually ended up filling my case
Yeah.
and saying, I'm going to leave this bit of clothing behind. I'm going to throw it, squashing, sitting on my case to close it. So I get it now. I have to say, I was never much one for going into these places, but I do now. I've lived and felt and observed the power, the draw of in the flesh retailing. Anne Marie, tell me, what did you say the competitor is called again?
It's called Pricer. Price with an R at the end. It's Swedish.
How 90s. And tell me, are they not floated by the looks of it?
They are, yeah. They're on the
Oh, they
Swedish
are. I
Stock
see them.
Exchange.
Oh, no.
Yeah, they're
Sorry,
small.
PRIC or is it?
Yeah.
Oh,
Mhm.
I can't get them for some reason. Anyway, and they're Swedish.
They're Swedish, and they're exchanged on the Swedish Stock Exchange. I pulled their annual report. They just published it actually at the end
Mm.
of March. Um, yeah, and a slowdown in sales year over year.
Oh, yeah, I've got them now.
Mhm.
Interesting.
Mhm.
Okay. So,
Oh, and actually, I
yeah,
have a good point on that competition,
yeah.
which is neither of these ESL makers install their own tech. They have like contractors that they use. So for Germany, this is their person who goes in and installs all the tags overnight.
Mm.
Their contractor in Germany, interestingly, Pricer's contractor just walked out of an exclusivity contract with Pricer because they wanted to sign a contract with VusionGroup. And that tells
Interesting.
me that
Yeah.
retailers want Vusion's technology over Pricer's.
Now, just looking at the two companies on the fly here, what I observed was that Vusion is a $3 billion business where Pricer is like 100 million. What am I looking at? Euro. So,
Yeah.
effectively, Vusion is 30 times bigger than Pricer by market cap. But what I also have noticed is Vusion is not profitable, whereas Pricer has an absolutely ridiculously low PE of 0.82.
I do have a good point on that though, which is Vusion has a really funny deal with Walmart, which is that I like the specifics are actually in the update that went into
Nexus report thing.
Nexus, the Nexus
Yeah,
report. It also went into
yeah,
Horizon,
uh-huh.
but basically Vusion, I think Walmart knew when they came to the table to sign this deal that this technology was going to be quite disruptive and they were going to want a lot of it. And so Walmart is buying Vusion as it adds the tech. So it's
I
something
see.
like as Walmart exceeds 3 billion in orders, it will automatically trigger a deal where Walmart buys out, I think it's 10 or 12% of Vusion. So that
Really?
has meant that their
Ah,
profitability looks really funny because they have to, whatever way they have to account for that in an accounting, meant their P to E this year looks really weird. But if you go
got you.
into Vusion's annual report, they give you like the correct numbers to international accounting standards. And then they also give you and here's the deal if we put in the Walmart money, but we can't add in the Walmart money because they're going to be buying out a portion of the business. But if you use those numbers, they are profitable. So that's
The
the issue.
Pricer's share price,
Mhm.
when I presume it floated some around 2016, was about 74 cent a pop. Today, 9 years later, it's 60 cent a pop. Its share price has been pretty flat. Fusion's has been just slow, steady, strong rise. And when
Yeah.
you think of that early mover advantage, I just hope their tech is defensible. But certainly, I'm totally interested in this one, Anne
Yeah.
Marie.
Yep.
Look, for the sake of us keeping ahead of steam, because we've lots of stocks to talk
I
about,
know.
and
Yeah.
we've been recording now for nearly half an hour. So, how about I push on? I'm not going to go as deep as you just did there,
Yeah.
um, which I thoroughly enjoyed. But like you touched there on our Nexus One, we recently reported, you and I and Mike, we wrote a report for Nexus One for all subscribers where we reviewed and ranked the stocks from the service, all of which, except one, I think, are from outside of America. And in that recent report 2 or so weeks ago, one was highlighted by Mike as one of his three favorites.
Yeah.
And it was a close one for me. We each picked our three favorite stocks from Nexus One, and one of the ones that Mike tagged, I was like, yeah, I might go with that one. Anne Marie, as you know, we've been soft launching Profit for about 2 months with a limited 3-month free trial at useprofit.com. Well, very soon we're going to drop an iterative improvement that has resulted in the average annual return for 16 years to 21.6%, which is absolutely unbelievable. But the amount of data and research behind this particular product, I believe, is unmatched. All you need to do to see all the data yourself is with the actual free trial. So go on in and sign up for the free 3-month trial. I also have a request for our listeners. If you know of any system or method that has returned anything like this, please write to us at pod@mywallstreet.com, because we are going to submit profit as a product to the equivalent of the Advertisement Standards Authority in America for validation of the fact that it is the greatest systematic approach to investing, period. So we would like to hear from you if you go, no, this other thing has worked better. So my message to our listeners is jump into useprofit.com, sign up for 3 months free trial, inspect the data yourself. And soon we're going to drop this improvement in the formula. Probably our last is the truth, because we need to just lock it down. And its average annual return for 16 years is an absolute unbelievable 21.6%. So that's useprofit.com. PROPHET, by the way. So surprise, it's Swedish, and it's called LifCo. And I don't wish to unveil all of the great things from Nexus One, but we are in a specific conversation about the best investments we can see outside of America at the moment, and I have to just go where I'm going. So nothing is impervious to the world economy. I mean, that's plain to see. But LifCo is particularly well padded. Look, I can't remember if we mentioned LifCo in Stock Club before. We've done about 250 podcasts, and during all of that time in between, I've been discussing stocks and reading about them. I just talk about the stock market nonstop, 7 days a week. So I might have talked about LifCo 3 months ago. Mike might have. I can't remember. That's the truth of the matter. Yeah. Did I say this on the podcast? Geez, I'm having total deja vu moments here about how like Graham Norton on his show said he'd never met Britney Spears, and they produced footage that she was on his show. Well, anyway, I'm having multiple layers of deja vu here. I probably even gave that anecdote, but anyway, here we are. So LifCo is a Swedish serial acquirer. There's loads of them up there in Sweden, and it's focused on the industrial sector with very specific, distinct niches, as you might say in America. And its main divisions are dental, demolition and tools, and systems solutions. I mean, like, come on. So they really have their thing. It's like, you know what? We did demolition and tools. I think we should go into dental. Yeah, because we can, it's just a small demolition tool. Yeah, you got it, boss. Let's do it. So anyway, what attracted us to LifCo when we published it to Nexus One about 1.5 years ago, apart from its score, its Nexus score, which was assigned to basically every floated company in the world and gave us a short list to go research, was an exceptional track record. Like, the track record of this business was unbelievable. The management team had a great track history as well, and it has this really rock solid acquisition strategy that's formulaic, and you find businesses that lock down, crack their code. And our colleague Frank is always talking about, we need to crack the code. Every business has a code, a unit economics, you might say, and serial acquirers need to have a very distinct code that is profitable. And like Kelly and Partners is another one. It only acquires businesses that fit inside the envelope of its algorithm. So what we said in that recent report, Anne Marie, about the Nexus One recent report was, in 2024, these attributes, Sean, I don't know what attributes, I can't remember, with the company completing 13 separate acquisitions throughout the year. Its target companies coming from the UK, Italy, the Netherlands, Denmark, Sweden, Germany, and Switzerland. This kind of international diversification reinforces our investment thesis. Overall, 2024's performance was slightly underwhelming thanks to its demolition division experiencing weaker market conditions. However, investors were buoyed by the direction management is taking and the company, et cetera, and leading to a significant rise in share price. So Mike loved it. That's what he wrote in our review a few weeks ago. It totally resonated with me. And what I particularly like in today's market, in the turbulent waters in which we sit today, is that LifCo is pretty much doing its thing outside of America. Now, that's not to say the companies that acquired in the Netherlands, Denmark, Switzerland, Germany, Sweden, everywhere else are not selling their stuff into America. You would expect and hope that a lot of them are, but you would equally expect, and it's a fact, that they are selling most of their stuff outside of America. So all of these acquisitions are highly specialized and they're all market leaders. So LifCo doesn't just go in and buy, if you like, the pricer, to use the conversation we're having. They don't want the pricer, they want the Vusions. Do you know what I mean? And by the way, folks, for clarity, LifCo has not acquired Vusion or pricer. I'm just using that analogy. So it looks for leaders in their respective niches, and together they will add around 2 billion Swedish kronor to LifCo's top line revenue just from last year alone. So I think even more importantly about LifCo is that it's playing to its strengths by adding and adding and adding in a way that has been proven. And it's the fast, and it's just, and especially, by the way, its systems and solutions division, it's bought 7 new companies in recent times. So Mike said it when he said, and I quote again, "It's clear that the conveyor belt of newer companies continues to deliver fresh and exciting opportunities. As with many successful serial acquirers, the goal is to find riches in niches, and the company is doing just that." And when I jump into its charts, really, it's a thing of beauty. So total revenue per year has grown at a compounded annual growth rate of about 14%. Not up there with Vusion, but it has grown steadily for 10 years at least. Is there any year? The only year it didn't grow was 2020, and very few companies did, for the obvious reason. But it looks like a xylophone, up. And the return on equity as a measure of a capital efficiency has been above 20% every single year, with the exception of last year, where it was 19.6%. It nearly touched that parameter. And that is one of the reasons why it scored so well in Nexus.
Yeah. Okay. I like it. And that actually goes into my next one very nicely. Because, because as everybody knows, I am a little bit of a market scaredy cat. I always like the more conservative stocks. Like if we go, like if we're talking about, what our favorite stock is, and Emmet will pluck some Swedish company that's like doing eyeball surgery, and I'll be like, Costco is just so solid, isn't it?
Yeah.
Like, how could you beat it,
Yeah.
And so
your hit rate is way higher. You will be right more often than me, but when I'm right, my results will soar. So like you have to kind of go one side. You have to know who you are and go one side or the other. And I love that you have that perspective, because I see all the time great, solid businesses that will probably marginally beat the S&P 500, whereas you see them and like them.
Yeah. Whereas I think, Emmett's building this portfolio of, he's saying, right, I'm going to pick 20 incredible growth stocks, and 3 of them might 100x. And so the rest of them can absolutely fall into the sea. That kind of a vibe. We're just kind of different styles. And so, we're going through this massive market correction. We kind of knew a market correction was coming. We've been talking about it for several months. And so I was like, I'll go have a look at Costco, my OG, my favorite. And the takeaway I had from Costco, looking at Costco just rather quickly, is that tech has really sold off the last couple of weeks, particularly big tech. A lot of other stuff has not sold off and remains comparatively expensive to itself. So Costco is only down about 10% from all-time highs. Its stock is still flat for year to date, and its P/E is insane. It's 55. And that is up a lot. Like, its P/E has risen a lot in the last 2 years. And Costco has really performed well. Like, I think since I topped a position in 2022, I think I'm up almost 250% or 300% before the stock fell, which that's a great return. But Costco should not be moving like that. And so at this kind of expense, I can't plug Costco. It's too expensive at a 55 P/E. And this is not the only kind of maybe value play that's priced like this. I went and looked at Rollins, ROL is its ticker, and it's a pest control company. And in my brain, I was like, pest control, completely recession proof, solid, because cockroaches are going to outlive us all. So at the end of days, we will still need to have pest control people. And it's trading at 60 times earnings. And I was like, I can't even comfortably be like,
that's
guys,
ridiculous. Hold on. The guys who come in and get ready for cockroaches and rats are at 60x earnings.
60x earnings. To be fair, very solid business, consistently profitable, solid growth. It's the best performer in the industry. But I was just like, man. And so we are in a market sell-off, but I will say, having just done this observation, not everything is on sale. So again, it's this thing of
Yeah,
like,
that's true.
if you are realizing that you need to balance your portfolio, if you are like, you know what, I need a couple dividend stocks, or I need, stuff is still expensive. Do not initiate a position, particularly because we don't know where the floor is. Like, as we even said at the top of the show, we're now having bond issues in the United States. The market could continue to fall for the next 60 days or whatever. And so I was looking for a solution to that, and I found one, because you were just talking about a Swedish company that's a serial
Yes.
acquirer. So why don't we talk about the greatest serial acquirer of all time in the United States, which is, of course,
Constellation Software.
no, it's Berkshire Hathaway. Come on.
Well, oh yeah, of course. Constellation's Canadian anyway. We're
Yeah.
gonna get letters about that. Of course, Berkshire.
Berkshire Hathaway. Why would you ever walk away from Warren Buffett? And so obviously Berkshire is incredibly difficult to value. They are coming off the back of 2 really great years. The reason they've had such a great 2 years is because they're in insurance. When you work in insurance, you are only allowed to invest your insurance premiums in really low risk assets, which means that Warren owns a lot of 10-year US treasuries. And typically those have really low returns, less than 1%. But for the last 5 years, he has managed to generate about a 5% yield on his cash holdings in his treasury. So he's been generating a lot of cash. And then on top of that, he has been gradually cashing out of Apple and Bank of America. And he started doing this well over a year ago. And at the time, me and Mike discussed it. And the reason he was doing it was to rebalance the portfolio, because Apple had grown to be like 40% of Berkshire Hathaway's holdings. And if people wanted to own Apple, they should own Apple. They shouldn't own Berkshire Hathaway. And so he was beginning to trim that position, but it was something he had been thinking about for quite a long time. And he'd actually called Tim Cook to be like, hey, I'm going to start selling out of this position, just FYI. And Tim was like, fair enough. So now Berkshire is sitting on a whole lot of cash. As of recording, it has $334 billion in cash. That is a lot of cash.
Yeah.
It's the largest ever. And the interesting thing is, he's sitting on all this money, and everyone's going, what are you doing, Warren? Where's the next move? Like, where are we going? What are we buying? We buying the Space Needle? Like, what's going on? And as of right now, we don't know. And some people are wondering, because, Warren Buffett's 94.
Yeah.
His successor has been named. It's Greg Abel.
Yes.
And some people are like, maybe he's setting up so there's a nice pot of cash, so when Greg comes in, he feels empowered that he can like start buying up stuff. That could be a thing.
I was of the mind it was that, but I don't think that like, while Warren Buffett is folksy, he's not that nostalgic. He'll hand over the greatest asset he can do.
Exactly. And so, I went back and looked at the shareholder letters for the last couple quarters. Me and Mike have been talking about this. The main takeaway, like in the last quarter, they only bought 2 businesses, and one was Domino's, which it's owned forever, and it was basically just topping up a position. And the other one was Constellation Brands, which owns all the Mexican beers, and they're very popular in America. And it had already basically had tariffs priced into its price. So Warren was seeing a beloved brand at a discount. That's a classic Buffett play. So he picked up a good chunk of that. But he continues to sit on all this money. And in his last letter, he said, Berkshire shareholders can rest assured that we will forever deploy a substantial majority of their money in equities, mostly American equities, although many of these will have international operations of significance. Berkshire will never prefer ownership of cash equivalent assets over the ownership of good businesses, whether controlled or only partially controlled. And last summer, when he was already sitting on $200 billion and he was continuing to sell out of positions, he said, we would love to spend our money, but we won't spend it unless we think there's something that has very little risk that can make us a lot of money. So basically, Warren is sitting on money, and he's waiting to find great investments, and he knows that the market needed a correction. And that's something Mike said 6 weeks ago. He basically said, this market is not a Warren Buffett market. He does not like speculative tech. He doesn't like expensive stocks. He waits until he can find a sure thing value play at a cheap price. And so I think this is a really interesting time right now to have Warren sitting on a lot of money, and he's good at picking recession-resistant brands. As we just saw, he picked up a beer and a pizza company, and those tend to do just fine in recessions.
Sounds like he's going to sit at home for a while.
Exactly, yeah.
And eat pizza.
That was also something Mike pointed out, that he was like, Warren loves unhealthy food stocks. Like, never has the man picked up like, an avocado brand. No, pizza, Coca-Cola, beer, done and dusted. And so right now, everybody's quite frightened because the bonds are selling off, stocks are selling off, everything's selling off, gold is shooting up.
Yeah.
The name of the game right now is going to be capital allocation, right? Particularly if you're feeling insecure.
Yeah.
No one is better at capital allocation than Warren Buffett.
No.
And so you're kind of like, okay, if you're nervous, now is a good time to put Berkshire Hathaway on your watch list. And I know what you're saying. Anne Marie just said that the market could drop for the next 60 days. When am I supposed to pick this up? And I will tell you when you can pick it up. And it's because back in the summer of 2024, Berkshire stopped buying its own stock. And Warren was asked, why are you no longer buying your own stock? And he said, it's too expensive. He said, Berkshire Hathaway is too expensive. He said, we will continue buying our own stock when we feel it is of good value. And so there you go. That's perfect. You can watch Warren Buffett. You can see when he starts initiating stock buybacks, and you can just follow the herd and go into Berkshire Hathaway. That, I think, is the safest thing one can do, because then you're not timing the market. You're following Warren Buffett, who's sitting on $350 billion of cash and could probably buy out, I don't know, name a business with a market cap under 350 billion. Warren Buffett could buy it tomorrow.
It's the vast majority of all businesses. There's only a handful that have passed that threshold, probably probably a dozen or so. No, it's probably about 40 companies are worth more than 350 billion.
Yeah. And so I just think, an easy way to balance your portfolio, lots of diversification baked in. Warren has spoken about tariffs. He does not like tariffs. He does not think they're good for business. That's, a kind of, it's nice to hear the leader of that business coming out and being like, hey, I'm not a fan of this. I don't think it's good. He just feels very in control, and he has such a wisdom of trading. He's been trading for decades, and if you're nervous, just let Warren take control.
Well done. That was excellent. Really impressed with that now. I might just change my style. I think after 30 years of me doing what I do, I think I'm going to just basically go to your side of the table and go, right, Anne Marie, teach me, tell me, what are we going to do?
Yeah, just get a nice, boring, nervous business. Sometimes you do really well. Like Costco's returns over the last 20 years, unbelievable. And they're just, you love to see them win, but
I'm so annoyed. I get flickers of dismay over things I sold in the past. I bought Costco forever ago, 25 years ago, and then I sold it like 15 years ago. Same with Mercado Libre, and the old buy it and hold it forever. Just let it play its end game, or you play your end game. Just hold it forever. And
I understand the thing about the expense, particularly if you're a growth investor. A lot of the times people will be saying, well, we don't talk about valuation metrics. We don't talk about stocks being expensive, because sometimes they'll blow your mind. Like I think so often about last time we saw Bill Mann, he was talking about Chipotle in 2010, and the stock had a PDE of 25. And everyone was going, Bill, are you insane? They make burritos. There's no way that you should be buying a burrito chain at a PDE of 25 and McDonald's is trading at an 8. But then Chipotle turned around and produced 25% revenue growth every quarter until 2015, when they got a listeria outbreak. Oopsie. And then, but they were also able to grow earnings at an even faster growth rate. And you're saying valuation doesn't matter there, because they're going to beat every expectation that the market could ever have, and the stock is going to perform. But Costco is very much more mature along its growth strategy. We're not throwing up 100 Costcos a year. We're throwing up 4. It's just a 60 PDE. It's just you can't initiate a position here. Just hold off. But I do love Costco. I think it's a great business.
It is, it's an amazing business. And Jim Senegal, we could just do podcasts about that one business every week, and it would actually remain interesting. It's funny because you're talking about the listeria whoopsie outbreak in Chipotle. I feel is analogous to the tariffs today on the company I've selected as listed in America, because the listeria outbreak was not a good thing, but it caused a price drop that allowed certain sharp-eyed individuals to hop on the bus. And the business that I've been watching for the last couple of days thinking, I don't know, I don't think that's very rational, is Shopify, which probably doesn't need an introduction at this stage, because in all likelihood, everyone's credit card details have passed through their architecture as they bought something online. And in that journey, everyone has seen their brand. I think so. Maybe I just live too much of my life online, but I would have thought everybody knows Shopify. And then coupled with the fact that we've been talking about that business here on Stock Club for years and years. So for those who don't know it, in a sentence, how do I describe Shopify in a sentence? It is a e-commerce platform for every type of business to manage their online stores, and they have tools for sales and marketing and payment and logistics, but most of all payment. That's how I describe Shopify. They are, all of their merchants, one of the kind of buzz terms that was going on for a while was that all of their merchants collectively have a product set to compete with Amazon. So very often they were seen. What was the? Oh yeah, they were the David to Amazon's Goliath. So that's Shopify. I'm pretty sure everyone knows it. Anyway, their shares have been walloped as a result of these tariffs, mainly because the merchants who use Shopify's tool set are small and medium-sized businesses, and they tend to be more vulnerable to macroeconomic pressures. As simple as that. So the particles below Shopify, its B2B customers, will feel in varying degrees a lot of pinch from these tariffs. So you might have somebody sitting, making handmade leather purses in Georgia, America, and they're sending them, 40% to Europe, or someone sitting with nice olive oil in South Italy and they're shipping it to America. Everybody is going to have an impact on their business, and they are customers of Shopify, and Shopify's customers are going to suffer. And then when you also think there's also a compounding issue, which is the fact that like all of these tariff changes which are kicking off. Is it today? Was it midnight? I mean, it's
the renewal of the China tariffs, the doubling.
Oh yeah, that's
today.
tonight.
Yeah.
I mean, nobody feels comfortable that this is the end state. So there's a further set of, I suppose, there's a further state of paralysis hitting everyone, because no one person has a perfectly clear picture of how this tariff war is going to play out. So there's this upcoming removal of the de minimis tax exemption on May 2nd, which might add further pressure. So I'm not sure, a bit like you with your conversation there about Warren Buffett, I'm not sure that Shopify is a surefire thing in short term. Very little is in life, very little is, but the brand, and I think it will power, Shopify is going to power a huge chunk of the internet's online commerce for the rest of my life and the rest of everyone's life who's listening to this show. Sorry to make it mortal, folks. And I think, so if you're a lifetime investor like me, I'm like, okay, Shopify is there. It has these merchants. Their businesses are going to be hurt or affected, influenced, whatever adjective you choose, whatever description you go for. Like, the businesses are going to be pinched, but when you look at Shopify on an annual basis, or its revenue on a quarterly basis spread out across several years, Q4 is bigger than Q3, is bigger than Q2, is bigger than Q1. So as the year goes, its sales go up. And then you take that pattern and you put it in next year, and you improve each one based on the same quarter a year ago, but it goes up 4, drops a bit, up 4, higher, drops a bit, up 4, higher, drops a bit. I hope I described that properly. And so the last reported quarter was a record quarter, because last quarter was Q4. And effectively, its revenue has grown by 36% compounded since the start of 2022. Of course, it had a huge tailwind in the obvious for online commerce, but its return on equity has grown 136%. Effectively, its return on equity now is in that elite nearly 20% category. And its sales, Shopify's sales have grown and grown and grown, yet it's been totally clobbered in the last couple of days. It might be in for a few more days, weeks, or even months of beating, but I still think this is a lifetime to buy stock, just the way maybe Chipotle, Costco, Berkshire, Vusion, and LifCo all are.
Yeah. Okay. That was a nice little wrap up. What are you?
Oh, a bookend. Hey, are you watching the studio?
Yeah, about the bookends, the importance of bookends.
Wow. It's brilliant. Oh, folks, listen, just go subscribe to Apple TV and watch the studio. Of 3 episodes have dropped, and it's Seth Rogen who's been appointed as the director of a movie studio, and it is just so good.
Yeah, actually, I think Apple TV is on sale, because when I was on Yahoo Finance yesterday looking at how horrible the headlines were, they had a headline that said Apple TV temporarily on sale. So there you go. Do not buy stocks. Get an Apple TV subscription and watch some TV shows and just don't look at the market. And
Do what Warren is doing.
yeah,
Drop a few bill on beer and pizza
there you go.
and Apple TV.
All will be well. But on economic beer and pizza, do not go splashing out. You do not need, like a fire oven pizza. No, you need Domino's. Get a coupon. Find a Domino's coupon, and then you can get a Domino's pizza. This is, you got to save up as much money as possible. You got to follow Warren just in case, the market dips 70%.
Hey, by the way, life hack over here in Ireland, we aren't as accustomed to coupons as the rest, as America.
Oh,
like,
yeah.
You know that. I mean, you've lived it, having lived in Colorado, but coupons are a super big thing, and they're just huge, and everyone loves them in America and keeps an eye out for them. And we've become over here in Ireland a little more aware of them in our online buying habits. But I use ChatGPT now whenever I'm at the cash register of anything. I jump in and go, hey, get me a coupon for this website. And half the time it nails it for me. I got a 40% off coupon off ChatGPT on something I bought recently. Wow. I couldn't believe it. Yeah.
40% is a lot.
It is a lot. It was valid. It was legit. The company accepted it. And there you go. Life hack, folks.
There you go. So yeah, look. I mean, we're looking for deals wherever they are, whether that be whether that be on the Domino's or on our favorite stocks. All right.
Yeah, whether you're buying a woolly hat and want 40% off, or you're buying a Swedish serial acquirer of demolition and dental products.
That kills me. The demolition and the dental kills me. Come on.
I know,
that's crazy.
It's true. You have a dentist and a builder basically perusing LifCo's product set.
Yeah. All right. Thank you for joining us this week, guys. Thank you, Emmet, for your 2 stock pitches. That's everything for this week. We will see you again next week.